Hi, I'm Paul Merriman, president of the Merriman Financial Education Foundation, and today I want to speak with you about America's #1 retirement investment. I'm going to talk about target date funds. I'm surprised how many people don't even know about target date funds, as they represent the investment that most 401k money is presently going into. Now, before I talk about target date funds as the #1 investment, let me talk about the top 3 investments of all time for the public. Back in 1924, the first public mutual fund was developed and offered to the public. Now, what that did, and it was amazing at the time, because only the very wealthy and their families had access to professional management. Everybody else was on their own. And when that mutual fund became available, there was the opportunity for small investors to be treated, in essence, the same as the most wealthy. So that was a big deal. Of course, it was too bad that it came right before the Depression and people lost their appetite for investment for a while, but they stuck in there and they survived to be the premium investment for American investors today. #2, and by the way, from the development in 1924 all the way to 1976, there really wasn't any one thing about investing in mutual funds other than a whole bunch of government regulations and things that were developed to try to protect the investor. But what happened in 1976? It was a revolution within this industry. John Bogle offered the first index fund. Now, the index fund is simply a fund that replicates a large number of securities within one kind of stock, one what we call asset class. So he did the first one using the S&P 500. And why was this revolutionary? Well, #1, it was the first time anybody had offered to the public. Again, the wealthy had an opportunity to do this before. Vanguard did it for the public. But it offered an investor broad, massive diversification, and it offered lower expenses. And people laughed at him. It was called Bogle's Folly, because who would want to own a mutual fund that only produced average returns? Because in theory, that's what you're going to get. Well, it turned out, because the expenses were dirt low, dirt simple, the fund was dirt simple, that it turned out to make more money than all those fancy Dan advisors who thought they could beat the market. And so over time, there's been a huge move to index funds. Now, you'd think, how can you top that? Well, it turned out they did. And it wasn't Vanguard, but Wells Fargo came out in 1993 with an investment called a target date fund. Now, why has this become the #1 investment for retiree or people saving for retirement? Well, let me go back to when I first entered the business in 1966. Back then, there were pensions for most of the people that I knew that worked with corporations. And those pensions, here's what they did. The company would reach in before they even paid you any money. They'd reach into your pocket, take some of that money and put it into an investment for your retirement. They didn't ask you if that was okay or how much you wanted to save. They just took it, they put it into a pool of investments built to address your need for risk and return when you were young, and then when you got older, they would reduce the risk with more bonds. Everything was taken care of. You didn't have to make any decisions. You had to stay with the company probably to get the money, but that was about it. Well, the target date fund, in a sense, has come just in time because pensions are really rare today. And now the government and the economy and the country, we say, you do your own saving. You decide where you want the money to be invested. You decide how much you want to save. Well, now all of a sudden, people have a real problem because number one, if they have a choice, will they save? Maybe not. In fact, many are not. And if they invest, like 23% of millennials who are investing in their retirement right now refuse to put any money in equities. Well, for those who understand investing, equities for a young person, that's where the money should be. Later, you get conservative. So all of the responsibility is on the back of the investor. Enter the target date fund. Because when you invest in a target date fund, they make all the decisions for you. Yes, you have to make the decision to save, but then they will put you in the right portfolio for the amount of risk you should be taking. They will make the adjustment over the years for you. The only thing you need to tell them, one thing, when you expect to retire, because they'll do everything from that point on. And many of those same target date funds will take you right on through to the pine box. Your whole adult life can be taken care of by professionals as good as any in the industry. Now, there are a couple problems with those target date funds because they're built for the average person, and that's okay. They're still great, but they have too much in bonds when you're young. They have too little in small cap and too little in value. If you don't understand those things, you can come to my website and I'll do what I can to teach you about them. But here's the bottom line. A fellow named Chris Pedersen came up with a plan to add one additional fund to the portfolio, one. And that fund is a value fund and it's a small cap fund. And he gave a simple formula how to decide how much you would have in each one. This is so easy. You multiply your age by 1.5. And that's how much you have in the target date fund. The balance you put into the small cap value fund. You can do all this at Vanguard, you can do all this at Fidelity, you can do all this through a lot of 401k plans. So this means a little bit of it's up to you because each year you have to be able to multiply your age by 1.5. And by the time you're 60, you're virtually out of the more risky small cap fund. So learn about target date funds if you don't already know it. Read, in fact, go to twofundsforlife.com if you really want to think about that as a strategy you want to take on. I hope that you will take advantage of America's #1 retirement investment and maybe push it just a little further. Thank you.